Hello guys, so today we're going to talk about how you can find order blocks trades on synthetic indices, specifically on step index. This also applies to forex, but the reason I choose this particular one is because I use it on a lower time frame, specifically 5 minutes time frame, meaning to say you can scalp on it, which is brilliant. I want to show you how you can make or find trading opportunities each and every day, almost every day on step index using order block strategy. So we're going to be going for 1 to 3 risk to reward ratio since we will be scalping. So I'm going to use this vertical line. To highlight each daily candle because we are going to now we are on 24-hour time frame, but we're going to go on 5-minute time frame to take our trades, or to let me show you how to do it. So for you to be able to see specifically what I'm saying, let us highlight these candles here because we are on a 24-hour time frame. So this is what I'm going to do. I'm going to highlight a few, starting from this is the current day, what's happening now, and like this. I hope this video is going to be educational, and I also hope you're going to learn something. You can use this even on which market that you will be trading, maybe Bitcoin, maybe whatsoever, maybe forex, but just back test it and see how many opportunities that you can find on a single day. So that should be good. Okay, I don't want to make this video too long, but guys, if you haven't subscribed yet, please do so. It will help me a lot. It helps me a lot. So now I've highlighted a few days here, so I'm going to scale down to 5 minutes time frame. So now we are on a 5-minute time frame. As you can see, as I said before, this period here represent a full day. This period here represent a full day. So when you see this vertical line here, it means that's the beginning of a particular day. We are on a 5 minutes time frame. So what are we going to do here? We're going to look for order block trades. For example, if we go where the market is right now, we don't see anything interesting. Here. This is 5 minutes. So what we're going to highlight is a lower low, higher high, and that market should be broken so that we can highlight our order block for us to take a trade. So as we can see, the market just started from this candle here, and what do we see yet? We see this lower here, and particularly this high here. The market haven't decided yet if this is a high, but now we know this is a low. So we are waiting for the market to do whatever it does. So this is the beginning of this particular day. Let us remove that one because there is no much price action there. So let us go to the previous day. Beautiful. So what do we see on the previous day? We see the market gave us this high here. Let me use this too. This high. The market gave us this high and this low. So what do we expect when the market gives us this one? We are expecting the market, because it started here, then it came up, then came down and give us this low. So when we see that the market is now tending to go up, right, to break this high, what are we expecting? We are now expecting the market to do what? To come back to this order block, because now this one becomes our order block, and this one also is our order block, and this one also is our order block. But we are going to take those ones which are highly going to be respected by the market. But in this instance, nothing happened, so let's just move on. So This happens a lot. You see the market breaks a structure, then just go without giving you an order block. But please don't be greedy. Wait for your order block to be respected, then take a trade. This will help you a lot. So that is what we're going to do. Once the market respect our order block, sometimes you can get 2 or 3 order blocks, and you can use only one order block, or you can use 2 of them. What do I mean by that? For example, the market here break the structure here. If the market was going to come back, there is this one here, there is this one here, there is this one. The most important one is this one here, that is the one that we are going to be using, or the other one, because here there are 3 here. The market can come back to this one but doesn't come back to this one. But as we can see that this order block here and this order block, they are almost in the same range, because if you see this upper wick, and if you see this body, so this one will be okay. But I will show you another example where this might be pretty tricky, but you can find beautiful trades. Okay, because I've back tested it and I've seen it works a lot, so I'm very comfortable to be taking trades when that happens. I'm going to show you in few seconds here. For example, what happened here, the market created this high here, then it retraced and created this low here. So what do we expect now? We are expecting for us to take long trades, we are expecting the market to break this high, right? We are expecting the market to break this high, which is beautiful. Why? Because the market did that and break this high. So when we are now going to identify our order blocks, which order blocks are we going to be seeing right now? We can see that we have 2 order blocks. Then when I say 2 order block, basically we do have 1 order block, this one, the one that pushed up the market. But more often than not, you can find out that the market respect also another order block or another red candle, more often than not. So now we're expecting the market to come back to this order block here. But what the market did now, it came and respected this one here, this red candle here, and the market shoot up. So that is what I'm saying, that go back and retest and back test on the particular pair that you're going to be trading, and see these examples. You can see that more often than not, it come back and respect this one, not this one, right? Because other definition of order block is the last bearish or the last bullish candle that caused the market to break. As you can see, this one was the last. This one is the last that caused this move to break, right? And the other definition is that the candle that caused the move going up, which is this one. This is the initial candle that caused the move to go up, right? So now you can use those 2 examples or those 2 definitions to define your order block. Once you've back tested and once you have seen what that particular market gives you more often than not. For example, this, what I would have done, or what I would do, what I do when I'm using this strategy on this particular pair, I will put a trade here and also expecting the market to come and stop me out, and also put another trade here. So basically I do have 2 trades. If this is not going to be respected, if this order block is not going to be respected, then okay, I'm also willing to take a trade here. What do I mean by that? For example, here I usually take 50% of this candle, right? Because these are small candles. This is 5 minutes. So on step index, if I take a trade here and put my stop loss maybe below this candle or just below this particular zone, and go for 1 to 3. So the reason I say go for 1 to 3, you can go for 1 to as long as you want, but the reason why I say that, because you are scalping, you don't want to be in the trades looking at the chart, each and every candle going up and down each time it does that, because it can it can get to your emotions. Your emotions can be triggered easily, because you'll be seeing each and every candle moving. drastically, so you don't need that. So basically you just need your 1 to 3, 1 to 4, 1 to 5. Basically 1 2 3, you are good to go each and every single day. I promise you guys, if you do this, if you go and test and back test, you can see that you can find those trades, and they are so easy. So basically on step index, this one is if you put your stop loss here, this is 90 cents. Then if it is 3 is somewhere here, this is $2 $2.70. So now if this is when you use the last lot size. But if now you're using risk to reward ratios rules on percentage gain, you can see that, guys, you can have a lot of money if you're using percentage gain, because you're using, this is one, you're risking 1%, and this is 2 3% gain, right? So for the day, this one you can say we are done for the day. This one you can say you are done for the day, because you find your setup and boom. So basically you can say we are done for the day if you are following your plan. If you said maybe you're just going to, when you win 3% in a day, you're okay, you wait for the other day. But okay, you don't want that, maybe you want another 3%. Okay, let's see if we can find it, right? But basically just have your rules in order. So what do we see? We see the market giving us this high here and this low here. So now we are expecting the market to break that, and it happened that it break this high, it break this high. So if we identify this order block here, if you don't know what an order block is, guys, I've made a video specifically about that. Go back and watch the first video that I made about order blocks, and you know. So I don't have to be explaining what an order block is each and every day. So okay, now we move on. Now what can we identify? We have identified that the market did not come back to this order block. Okay, it's okay, then the market continued going up. It's okay, it doesn't have to come to that order block always and always again, because the market can be just trending and going up without coming back. Especially this market, it usually does that because it trends a lot. So what you've seen, that the market created this high and this low here, and came break that and came back to this zone. This is not another block. If the market come back to this zone, this is now break and retest, which is another type of trading that I've made the difference between order block and break and retest. This one is considered to be break of this structure and retest this structure, but not an order block. So don't confuse that. Okay, let us look for another example. Now we can identify this trend here, this high here and this low here that the market created, this particular one. And if we identify this order block, the market broke and did not come back. So as you can see that here, the market was just breaking higher highs, but was not coming back because it was trending, right? Because this market trends, when it is going, it is going. So once you catch an order block right at the beginning of the move, you know that if you are holding, you are going to be holding for long and for more profits. Okay, so these examples are okay, but they are not so clear for most of you, but I'm just going to highlight them. This is a higher high the market created. You can see a consolidation here on 5-minute time frame, then break, then it doesn't come back to this order block. It's okay. And also what happened here, we have a high that we can all see here, a high that we can all see, and the market retraced. As you can see, all those three candles coming down, we can all see that. And if we identify that, then we can see the market from there, it broke. Then now we are going to highlight our order block, this one here, right? Because this is the move that caused this move to break. Then again, the other thing that I was saying, I don't want to confuse you guys, but I just want to give you options. I just want to show you most thing that happens in the market. Like this one here, this red candle here, the market can come back to this candle and go up without coming back to this particular candle. So you should be aware of that. So if it comes back to this candle that you're not considering to be your order block, right, don't get frustrated or don't do otherwise. So now this now goes to your plan. If the market comes back to this red candle, are you going to take a trade or not? Or you are going to wait for the market to come to your specified order block, right? Like for example, this one, it came back to your specified order block here. Then if you are going to take a trade here, then maybe you put below this candle, below this week, then go for 1 2 3, then you can see you find it and you good to go. You are good to go. So guys, I want to give you a lot of examples, a lot of back testing, a lot, but as you can see, as I can see right now, minutes are running and running. So okay, let me just say the last thing, not the last thing particular, but let me give you another example. So you don't have to be chasing trends, to be chasing. Like as you can see, the market came from here, going up. Yes, the market can still be going up, but you don't have to be chasing long trades here, to be just chasing long trends here. As you can see, the market have to retrace, a bigger retrace or something like this to come back to its official order block, the one that it created when it went up. So once you catch your move, your early move here, you're good to go. Don't be chasing trades, because what will end up happening, you end up having being stopped out and everything. So let me give you a few examples here right at the top. Let's say we just want to go for trades. We identify this high here. This example we've done it. So we identify this high here. Beautiful. And the market retraced in this low. The market gave us this low. So expecting the market to come back to this order block here. So if we highlight our order block here, because the market gave us this particular high, then it broke and came back to our order block. So if we're going to take a trade here, I don't know where you're going to put your stop loss, or you're going to use 50% of this candle. Maybe you put your stop loss right below this candle on your target there, and you can see that was a beautiful trade, depending on where you put your stop loss. If it is here, you're going to be stopped out. If it was nearly below that level or this candle, you would have won that one, right? Okay, beautiful. So now what now are we going to identify? Now the market have changed. Why? Because it broke this structure. Now the market broke this structure, this one here, because it created here and it came back to this one, then went up, and you see that the market did not break this one. It came back to this zone and did not break this structure here. And what? It came back and break this one. I hope guys you understand what I'm trying to say here. And it broke this structure and then retraced. So now, as I was saying, that now you're going to identify your order blocks. For this particular example, I want you to get what I was trying to say all along. So now what you're going to do is very simple. You are going to identify your order block, this one here, and also this one here, and also this one here. Why, guys, I'm saying this one? Because I've back tested this, and I've seen that most of the times, because this market trends a lot, it doesn't have the time to come back to this particular zone. It doesn't. Most of the time, it doesn't have this time to come to this particular zone. So once I've seen that there's another blue or red candle, depending on which way we are going, I'm willing to take a trade there, and I'm willing to lose there. I'm willing to take a loss there, right? So if I'm going to take a trade here, depending where, of course, I'll put my, because the market broke and came back to this candle, I'm expecting, or I'm going to take a trade here. Once the market comes here or here, that is when I'm going to take my trade, right? So if I'm going to put my, of course, this particular example, I'm going to put my stop loss right here, because I will not put on the end of this candle. Why? Because it is below this one. So I'm going to put on the high of this red candle here. That's basically where my stop loss will be, right? So as you can see, the market just from there went down. It just flew, right? So this is what I'm talking. Go back in and retest this and back test this. You will find out that more often than not, especially if you're using step index, you find out that it respects the other blue or red or green candle, not the specific order block that you are willing to take trades from. So in your trading plan now, you'll be able to see that, or you'll be able to identify that, okay, if the market comes here, I'm going to take a trade, but if it is going to stop me, it's okay. And if it also comes here, I'm going to take a trade, and if it stops me, it is okay. Why? Because I'm going for a better risk to reward ratio. At the end of the day, on the examples that I've gave you guys today, you're seeing that we did not take any loss, right? Which is beautiful. So now what are we going to identify? This one is pretty much debatable if this one was a retest or if this one was a retracement or what. But maybe you consider it to be a retracement, or you consider this one to be a low and that low was broken. Then you're expecting the market to come back to this order block here. Then it's okay. Then if it comes back to there, then you take a trade. Then you put on the highs or the last candle. As you can see, the market did what? Went to your TP. The other example is this one. If we identify this low, and the low was broken here, now we want the market to come back to this particular one, and what happened? The market came back, right? It missed, I don't know, with a peep or with quarter a peep or something like that, then went down. So this is going to be in your trading plan. Like, how are you going to take your trades? For example, are you going to take your trades if the market comes here? Like I've showed you guys in my last video, ways that you can take trades using order block, right? So you can identify that, are you going to take trades here, or you are going to take on the 50% of the, if the market retraces to the 50% of the order block, that is when you're going to take trades. So it is debatable according to how you want the market to react to your trading plan. But guys, as you can see, that you don't have to be chasing trades. Why? Because you are going to find your trading opportunity. As you can find here, as you can see here, the market broke this structure, then came back to this particular order block here. If you consider this one to be an order block, because it was the last candle that broke this structure, right? Or maybe this one was going to be if the market came back to this one or this one. So guys, as you can see that the better it is on this market just to take order blocks that are created when the price is at its very beginning of the move. Why? Because this market trends a lot. Because once it starts trending, it is just going to be trending, right? It is just going to be trending. Guys, this video is too long. I don't know who is going to be watching this video, but guys, as you can see, the previous day, this was just in a single day. As I said, guys, you just need one trade. This one right at the beginning, this the only trade that we need on a day. Then we go back to another day, just a quick one. Identify this low, we identify this, if that want to be broken. And here, as you can see, that the market came back here to this high. What happened? It went down, then came and break. Then if you identify this last candle here, what do we see, guys? What do we see? The market broke. Now we are interested to go up, and if we take a trade somewhere around here and put our stop loss just below, and we are good to go. That's a more than 1 to 3 risk to reward ratio. As you can see, beautiful, just like that. So every day you can find a trade, guys. You don't have to be waiting for this whole trend going down. You can also find trades. It is just beautiful, guys. It is just beautiful because it trends a lot. So you can just be marking, and once you've seen that the market is now way down, you don't have to be looking for more trades, guys. You don't have to be looking for more trades, right? The last example that I want to give you, you guys, is this one. You see the market here created this low. The market created this low, it broke, then it have to come back to our order block. Which order block are we going to be identified? The first one is this one. As I said, this is according to how you want it to be, guys. This is according to how you want it to be. Go and back test and see how your particular market that you're going to trade respect these levels. And also this one. So this is how I will do it. If the market come back to this level, to this one, I'm going to take a trade. No matter what, I'm going to take a trade. But if I got stopped out, it's okay. I also have this one. If the market comes back to this one, I'm going to take a trade. So what happened? The market came back to this one and I took a trade, or I who took a trade, then went to my direction. Same applies if you are using this particular order block, depending on where you're going to enter on 50% right at the beginning. But as you can see, it came to the beginning of this candle and you can take a trade, and as you can see, it is beautiful, guys. So guys, this market, you can find a lot of opportunities, as you can see. This is a daily period here. See the opportunities that you can find using this strategy. It's so simple, guys. It is so simple. You don't have to do a lot for you to find opportunities. You don't have to do a lot. So guys, thank you a lot for watching. Please don't forget to subscribe, turn on the notifications bell, and also like this video. Please guys, let us subscribe and share this, like this video, because it will motivate me to share more amazing tips and strategies, because I have a lot of secrets and a lot of small and nice things that I want to tell you guys. But once I know that you are much more interested in what I'm doing, then I'll be able to share. Thank you very much, and I hope to see you in the next one. Peace out.